Hello guys and welcome to my YouTube channel. I'm called Daniel and I'm here to show you guys my tips on how I did in order to master this SAGE SAARI program. So stay tuned, this video is for all of you guys. Today we're going to be looking at the part 3, that is how to record and process transactions in SAGE. And what I love about this system is a way on the manner in which it records accounting data. That means you record them into 5 separate or 5 different journals. That means there's a purchase journal, the sales journal, the balance sheet, the cash journal, and the general journal. That means all the purchase transactions or the purchase operations are recorded in the purchase journal. All the sales transactions or the sales operations are recorded in the sales journal. Everything that concerns cash, the movement of cash or in the enterprise or in the company, is recorded in the cash journal, and all the assets and liability of the company is recorded in the balance sheet journal, and all the extraordinary activities and expenses are recorded in the general journal. When we talk about the extraordinary activities, we're talking about those activities that are not related to the main activity of the company. For example, if the company is doing buying and selling of goods and services, that means the activities like water bill, electricity bill, or payment of salaries, they are not directly related to the main activity of the company. So all of them are called expenses, so they are recorded in the general journal. And please take note that financial statements are the key accounting documents of a company. That means when it concerns decision making in an enterprise, when concerning decision making in an enterprise, so you should be very, very attentive at this part or at this episode, so that you grab everything. And while recording, you should be very, very careful, because a mistake here is going to directly affect your financial statements. So let's get to work.
Welcome guys back for the part 3. So we're just going to continue with the last exercise, the exercise from the last video, that means from the part 2. So we're going to come on ancient Daniel study. We're going to open the last exercise that we did for the part 2, in filling up the journal codes, those chart of accounts, SP charts. So we're just going to open it. Okay, it's already open. This is a search program. I'm going to open also the example, that means the question that we did. So I'm going to open the new study. I'm going to take the question exercise 2. That was exercise 2. Okay, so this is that open the exercise 2 that we did. We're just going to continue in order to record it in the various journals. That means the balance sheet journal, the purchase journal, the sales journal, the cash journal, and the general journal. So that's what we're going to do today. Okay, so for those who is the first time, this is the first time of seeing my video, I'll put the part 1 and the part 2 on the description of this video. I'll put the part 1 and the part 2 on inside the description, or you can still go on my YouTube page, and from there you can be able to get it to the part 1 on how to create a company, and also to the part 2, that's how to work with this structure menu, which contains the chart of account, the SP chart, the tax rate, and the journal codes. But today we are going to be looking at the process part, that means how to record and process transactions in SAGE. So we're going to go to manual entry, and here this is a reason for the codes when they're asking the journal codes. Like now, I know that BAL stands for balance sheet. It's a balance sheet journal, but if that I cancel it and I put CBS, it's going to open me with the cash balance sheet. You get the thing? So this is why the codes are always needed, because now that if I open it, you're going to realize that opens to me the cash journal. But then we're first of all going to look at the balance sheet journal. So come on, put your B. If you see that balance sheet is starting with BAL, so BAL balance sheet, we're going to just open it. Okay, we're going to put it more big. Okay, so that's it. Okay, so we're just going to. Okay, so this is how the balance sheet journal appears, or this how it presents itself, like from the date, the voucher, the general account, the SP account. We're using the SP account, the entry comment, the debit, and the credit side. So we're going to look at all the stuff and the reason how we're writing, why should we write each thing. So let's get back to our question. For my question now, they say the financial position at the beginning of the period. So here we're looking at the balance sheet, and when I talk about the financial position, is actually the balance sheet itself. So we're going to record all these transact all these things that falls under the balance sheet. That means as from land to the last one, customer query. So all of them are falling under the financial position at the beginning of the period. That means at the level of the balance sheet. So we're going to record all of them. We're going to record all of them. So we're going to start here. Since it's a balance sheet, it's at the beginning of the period. So the day is going to be maintained, because when creating a company, you're creating it at the same date. That means that they created a company with all this stuff. That means from with land, stock, and everything. So the day is going to be maintained. It's in the purchase journal where I'm going to be changing it, but here the date will be maintained. It's not changing. So day one, voucher. Since voucher here stands for which the amount of the transaction they actually recording. Since land is the first transaction, so I'm going to leave it at 1. Maybe as construction is coming next, we're going to put as stock of goods coming next. Here the voucher will change it to 2 because the second transaction. And as construction is the third, we're going to put there 3. So it's a level of how many voucher that we're having, that we're going to be how many transactions that we're having, that the voucher is going to be changing according to the amount of things that we're going to be recording. So we're going to skip it and we're going to continue. Here now, this one is always empty. You're going to continue here to the general account. The general account, look at the general account. The general account now for maybe here we're looking at land. This is land, stock of goods, stock of goods, construction capital. So that's the thing. Now here land, now we're going to look at land. The general account for land is, let's say, is 0. Is that I'm confused? I know that it. The whereas the press is going to skip the SP account, because I will tell you guys that the SP account is meant for the customers and the suppliers. So it's going to normally skip the SP account. So we are going to get here now. You are going to hit here. You come here. Here is entry comment. They need to write the name of the account. You just come here. You left click. Just left click once, please. If I left click twice, it's going to appear there twice. Just left click once, and you're going to see how the name is just going to fill itself automatically here. After that, you press on the tab key again. You're just going to go on the debit side or the thing. So now you need to ask yourself, is land an asset or a liability? I guess a lot of people have this mix up or this confusion about assets and liability. Yeah, assets are the things that the business own. Get the thing? That means the business owns them. So that's why they call assets. Like the land, the building, and everything that goes along. Is the buildings on the delivery van and everything. So the business also. Here on the balance sheet, we are debiting everything that the business owns, everything that the company owns, and in the credit side, everything that the company owes. Actually, so. And we're going to look at the amount that we need to debit. The amount here is 80 million. So we're going to write there 80 million. 80 million. Okay. After writing the 80 million, you press on the enter key. It's just going to record it down. Enter key. I will see what's happening. It's just going to record everything that is stated. And here you have to realize here, you see the journal totals is 80 million. And the new balance is 80 million. Means they're just filling it, because this space is meant for the debit side, the sum of the debit side, and this space is meant for the sum of the credit side. I'm going to see it. So the next one is 2. The voucher will be 2. And we're having stock of goods. Stock of goods account number 311. After putting the 311, you press on the piece here. I just using the tab key. Just press on the tab key. You're going to move to the next one. That asks you now to automatically change the entry comment. That means the name of the account. And here it's just going to give us exactly, it's doing that thing, it's doing it automatically. It's going to automatically give you the name for the account number that I just put it. Here the account number, so it says stock of goods. So I'm just going to come here and click once, please. Left click once. I'm just going to automatically write it, the stock of goods. Then after doing that, you press on the tab key. You now ask yourself whether a stock of goods an asset or a liability, because all the assets, everything that the business owns is debited, and everything that the business owe people is credited. But stock of goods, since it's a business, will because it is stock for him to sell. So we're going to just take for example that you are the company, so your stock of goods is yours. So we're going to debit the amount. How much is the amount? 70 million. Is it here? 70 million. We're going to write here 70 million. After writing 70 million, we press on the enter key. It's just going to directly record it. I say, see something has happened here. It has just directly summed the two amounts. That means 80 million plus 70 million. It gave us just 150 million. So here, the part for just summing everything. So the next one was construction. The third one was construction. The account number for construction was, let's just say it was 230. In case you put the wrong account number, it's just going to open you all the types of account for you to can search the account number that you wanted to put. Since I was looking for construction and I wrongly enter the account number, so since my chart of account doesn't recognize it, it's going to send me to the full place where all my account numbers are there for me to go and search it. And if in case it's not there, that's why it's most of the time problem. You're going to come here on create and create the account number here on create. But since me, I just confused the account number, so I'm just going to come and select it because looking for construction, I just wrongly inputted the stuff. So I'm just going to choose 245 and I'm just going to validate it. Yes, that's it. So it's just going to automatically write the account number and propose to me the name of the account. I see how magic it is. So now I'm just going to come here, left click once, I'm just going to automatically write the constructions. So here now you come on the debit side and you're going to write the amount of construction. That means 24 million. 24 million. Wow. 4 million. So the next account number, so yes, the voucher should be 4. No, the date is 1 now. The voucher should be 4. And we're going to look at the next account number. It was capital, so there was capital 1201. So capital, I'm going to come and write here 101 capital. After we press the tab key, I'll just come and copy the account number here 101. After copying, we just come here on the it's capital, a debit or a credit, because most of the time people have this complication about where does capital fall. Okay, let me just simply explain to you guys. Capital is what they call a separate legal entity. That means the business owner is different from the business. That means different from the company. And when the business owner is different from the company, it means that the business is on its own. It's not like me and let me say me and your business and you are the owner. You get the thing? So maybe I come and I borrow you, maybe borrow me 500,000 for me to open my company, for me to open my business, for me to start my business, then start to buy my stock, my land, my construction. You get the thing? But the problem is the money, the capital that I started with, it is not mine. You get the thing? Because according to law, they recognize a company as a person. You get the thing? And when they recognize a company as a person, it means that he actually borrowed the money, not that it is his own money. Because the only money that is it is only the money that I will work. You get the thing? But then the money that I took, the capital I took, is still yours. It means that when I'm finished, I'll still need to give back their capital. So a capital is not what the company own. It's not something the company own, or okay, it's not the asset of a company. For me, money people confuse it by the logic that maybe it is his capital, is a business capital. No, it is the owner's capital, different from the business. So it's just like you lending me money for me to start up my business. So normally going to fall on the credit side because it's what the business owe to other people. So I'm going to put here, they say 280 million. So here I'm going to put 280 million. 280 million. It's going to directly input. I see what's happening here. As I inputted an amount on the credit side, it's just going to automatically write the amount on the credit side, then put the balance. That means the difference between the two. But since the credit side is more than the debit side, so it's having a credit balance. It means that what the company actually own, what the company actually owe is smaller than what it owes to people. So that's the thing. Voilà, so we're going to move to number 5. That means the new element number 5, and that's just how we're going to do for all the remaining ones. So we're going to put all the assets on the debit side and all the liabilities on the credit side. So let's just continue. Okay, so here I wanted to emphasize on this one because here we're going to look now at the suppliers. and some people have some light issue with the suppliers and customer. Here we're having supplier McKinney and supplier Bafoot. So with also customer McKinney, Kambi and Kribi. So here this is how we're recording the suppliers because of what issue recording the supplier. Here at the level of the general account, since it's a supplier, so what is the general account for supplier? First of all, what is a family account for suppliers? That's what you're going to put at the general account. Another the family account for suppliers is 401. I'm going to write here 401. That's a family account. Now when I'm going to press on the tab key, it's going to ask me for the SP account for the listing for the supplier. Here it has directly put supplier McKinney because he is a first supplier, and this account number here correspond to his listing to his account. You get the thing. So where is that account here? And I put maybe 3 here behind, and I press on the key. I'm going to see that the name has changed to supplier Ikuno. That's why we're always inputting all those SP accounts in order to recognize each supplier in the company as well as each customer in the company by the account numbers. So since it's supplier McKinney, I'm going to put 4011 because it's the first supplier that we're having. So I'm going to come here up, left click, and it's going to appear here. This thing is written here automatically. Then I'm going to press on the tab key. Since it's a supplier, suppliers are next of the company, so I'm going to put on the credit side, the amount on the credit side. That means 2,700,000. 2,700,000. I'm going to put 2,700,000. Right. So I just going to say it's going to be recording automatically with his SP account and the credit balance. So the next one on 411 and see 11. So the general account, what was the next one? Supplier Bafutu. A general account for supplier, first of all, it is 401. So now we're going to put tab key and we're going to look at the SP account. The SP account now for supplier supplier Bafut, it is not 411. It was the second supplier we're having on our list. So we're going to remove the one behind and put 2 and press on the tab key. It's going to appear all the supplier Bafut. I'm just going to click once and it's going to appear the name here. So we're going to now press on the tab key. The tab key, since it's a supplier, we're going to put him on the credit side. So now I'm going to write here 1,300,000. 1,300,000. Okay, so everything just enter it directly with all the stuffs. So that's the exact way that we're going to record customer. Like let's say the customer 411, customer Kabi here 411. We're going to come here first of all 12. I'm going to come here. The general account is 411. 411. After you press on the tab key, it's just going to show you the very thing now 4111 because Tobakabi was the first customer. So I'm just going to press on the tab key. I'm going to change the name here to customer Kabi. Then with this amount, this is a customer what the business own. So we're going to debit the amount. So we're going to put here 41 million. So here we're going to input here 41 million. And that's the very way I'm going to record all the other customers and the suppliers if they appear again after this one. So let's just continue. Okay, so we're done recording all the transactions in the balance sheet. That means all the debit and credit transactions in the balance sheet, everything that happened, all the debit and credit elements of the balance sheet. So now here is down to realize here at the debit side you're going to see 310 million, and at the credit side you're going to see 240 million within credit balance of 4 million. So people ask that why is it that there's a credit balance of 4 million? It's just like me, I'm coming to come and take money from you about 500,000 to start up my business or manage my activity. Now with that 500,000 on that, I was able to make or generate money. Everything, the asset, everything that I have. That means the store that I open, the stock that I have, the cash that I could generate. It's just 300,000. Get the thing? It's just 300,000. So the 300,000 is actually what I own, and the 500,000 is what I owe you. So now if that I owe you 500,000, that means what I owe you is more than what I owe myself. That means I'm actually making a loss at the level of look at the company profitability. So that's why it's a credit balance here of 4,000. That means the liabilities are more than the company assets. So now to correct this, now to record this transaction, because the balance sheet always needs to balance. Now to record it, since we're having a net loss, we're having a loss because we're having a loss because the credit side is more than the debit side. But if in case the debit side, that means here is more than here, that means we're actually having a net profit. That means the asset that we own is more than what we owe people. It means that what we actually have as personally, that we generate with that 500,000 more money than the money that we borrow. It means that if it's that 500,000, it means that I have 700,000. Actually, I'm making a profit of 200,000. You get it? So now, yeah, that's why at the beginning, I was after receiving cash, the next step after receiving cash is to look whether you actually make a profit or a loss. That's what some people not usually do, because after they have sold something, they don't even look at the level of if they have make a profit or if they have make a loss on the sale of the asset. You say something for about 100,000, but their profit there is not even up to 10,000. You get it? Some people don't even look at that level, so you just gotta squander all the money without even cross checking on whether you make a profit or a loss. So now, yeah, the general account that recorded for loss, it is 139. That was the general account. So net loss, we're going to write the net loss. Okay, so people have this complication on where should we record the net loss and everything. So yeah, if that we record the net loss at the level of the credit side because it's a loss, it is either going to increase the credit side of the account, and here it's still going to increase it to 8 million. I not be able to balance. Let's not have an example. That is, them just put the 4 million here to in order for it to balance. And I'm going to see that here as it's increased to 318 million inside that added to the credit side of the account. So the only way to balance it up is by putting a net loss at the level of the company asset, because it's actually the company's loss. So you're going to put the level of the company loss for it to be able to balance up the account. So we're going to double click on the here to order to correct it. We double click here. I will come here, I will correct it, cancel all the amount on the credit side. I come and put it on the debit side. That means 4 million. And you're going to see how now the this year has balance. That means 340 million, 340 million. Means that actually the balance sheet is well completed. And please, this thing I wanted to use you guys to take note. If it's that the balance sheet is not balanced, this thing is not going to close. The balance sheet journal is not going to close. Let's just take for example. Let's just say nothing here. Now here, let's just say nothing here. I will put here 4 million. Is that 4 million? So here the balance sheet is not balanced because here the debit side is 310 million and the credit side 380 million. If they want to close this year, if they want to close here, it is going to refuse. The way you say the journal, the journal balance sheet journal is for the period of this year is not balanced, so you cannot be able to close. So always make sure you balance it without forcing the amount for it to balance. It just be automatic as a date. Means that you come and just record all your transactions. So here we to put the net loss here instead 4 million, and it is going to balance now. And if that is going to balance, it means that it can be able to close easily. So we're just going to come across here. How I just see it, I just close automatically. So as that is closed automatically, now we're going to look next. We're going to take on the manually. We're going to take on the purchase journal. Okay, we're going to take on the purchase journal. But before the purchase owner, but before recording anything on this purchase owner, there are a lot of things that we need to produce. That means I need to calculate the VAT, that means the value added tax on purchase, and calculate the recordings, the manual entry. In order for us to know what needs to be recorded in the purchase journal, what needs to be recorded in the cash journal, what needs to be recorded in the sales journal, and all the sort. So let's first go to the recording part. That means the paper working part. In order for us to get all the software detail for us to continue this section. So let's get to that part first.
Okay, so this part is to show you guys in detail how we're going to do the recording, like the recording of the stuff. How we're going to do the recording of the stuff, how to record all the purchase and sales transactions that we're having. I just cut a paper from my book. Okay, this one is going to be enough, much more enough. Okay, so take a pen. We're going to continue with the recording part. That is the titular SS this in 100. So the first transaction that was carrying VAT that we're supposed to record, that was carrying VAT, was on the 3rd of March. That means there was sales of goods to customer Soho, 2,050,000, VAT 15.25. The payment was made with Bisec Bank. Okay, so now here we're going to write first of all the date. Here we're going to write the date. That is the 3rd of March. That was sales of goods. was sales of goods. So we are going to do the step one. The step one will consist of step one will be calculation of the VAT. First of all, calculate for the VAT. Calculation of the VAT. Okay, so now the level of calculation of the VAT. First of all, put the gross amount. The gross amount here was 2,050,000. So the gross amount here was 2,050,000 francs CFA. Now the VAT rate. They gave a VAT rate. The VAT rate was 15.25%. So the 15.25% giving us an amount of 312,625 francs CFA. So now after it, now we have the net payable. The net payable is the addition of the gross amount and the VAT. That means it will be the net payable. That will be 2,362,625 francs CFA. So the step 2 now will be taking care of the manual entry, as I say. So the manual entry now consists of recording the transaction that occur, like normally recording it, the transaction occur. So when the transaction like that occur is so they say sales of goods to customer Suho by the payment was made by the BCM bank. It means that they sold goods. It means that goods is leaving the company, and what's entering in this thing is the cash, the payment. So they say, since they say they pay in by BSEC bank, they pay us by BSEC bank, means that here we're going to write 521. Means that here is to show that the debit side. Here is show that the debit side. That means that what actually receive. So the credit of since this is what tax. Normally there was VAT of 15.25. I'm also going to record the account for VAT. That means of 4431, because this is the first VAT. Always identify this is the first VAT. And now we did sales. So this part is to show the credit side. I mean, this part should show the credit side, but you don't need to put it. This part should show the credit side, while this part is show the debit side. The debit side of the journal. So this is why you're going to debit, and this is why you're going to credit. Normally it's this and this is transaction. I'll call the manual entry. Now on the step 3. The step 3 will be taken care of. This is an example. The step 3 will be taking care of analysis now. We need to analyze now. Analysis. Okay, so this step 3 now, according to the software, you cannot just accept the fact that because like even in real life situation, when two companies are dealing, they cannot just directly make payment that I'm taking this goods I'm taking maybe this 5,000 kilo and I'll just pay you directly. You get the thing? It's not practical. It's no more realistic. You get the thing? So now, as no more realistic, the first thing what's happening is the fact that the first thing that will be done. Let me just take for example. The first thing that will be done will first of all be the debit. Let me just analyze. Let me just show you an example this way. It will first of all be the debit. Normally, the first thing that we're going to do is to debit the customer. That means 4414. I'm going to first of all debit the customer and then credit the sales. You get it? Then credit the sales. That means 4431 and 701. This is the first thing that is going to occur. Like every transaction of a company, you first of all debit the customer. He's not making the payment. We're debiting first of all the customer. Then we're crediting the sales that normally occur. Now, after the thing, as he has taken on credit, most companies always take on credit. So as he has taken on credit now, what's going to happen? After him taking on credit, he need to make now the payment. So now the payment now will be made by the account of 521 by bank to the credit of the customer account. So that will be 4114. Are you seeing? So now we need to now analyze it and put it here this way. So normally it's supposed to make the payment and a 411 a 411. Okay, that's correct. So now we need to analyze the data and put it in the analysis here. So what we're going to do now is the fact of first of all crediting 521. That means the sales as normally. Then you debit now like this one. First of all record this one back. First of all write it these ones back normally. We write this one back. As we're just copying the other one up. Now the fact is that what happened, the fact that we had the customer this way at the debit side, we also had the customer at the credit side. So what we're going to do is just come and put your flash here. Come and see. You put your flash down here, and you put your flash up here. This way to show that it was debited. Here it showed that it was debited, and here it showed that it was credited, and here it was debited also. So we're just going to put 4114 there and 4114. So this is what they call the analysis. So when you're done now with the analysis, you now put an arrow down. Now, how are you going to record this analysis in your sales journal and in your cash journal? So you create now what they call how to record. Now you're going to create the cash journal. CG means a cash journal and SG means a sales journal. So here you're going to put a circle, you're going to put another circle to show how the record is going to be. Everything that is falling here, when you talk about payment, what we're doing is to separate the payment from the transaction that actually occur. That's why this is created, because when you're making sales, we don't expect anything that concerns cash to be in the cash journal. So that's about making all the best. You have to separate. So in the sales journal, there should be nothing concerning cash. That means no payment on the sales journal. So that's why everything here, when there's bank here, is going to enter the cash journal. It means that everything that is this way is going to enter directly to the cash journal, and everything this way is going to enter directly to the sales journal. So this way is going to enter the account 4114 and 4431. That means a VAT on sales, and also 701. So we're going to copy it. This is what is going. These informations are going to enter the sales journal. So now the cash journal, the information is the payment and who paid the thing. It was 4114. From there, we can know what transaction happened because of which customer actually paid the thing. So this is a recording. This is a recording of the sales. So it starts from the calculation of the VAT. Next to step 2, manual entry, how each transaction is supposed to occur. That means 521 to the credit of 4431. Now here there's now what they call analysis, which I'll show you guys how to analyze. That's it. That's how to analyze. And then the last one now is how to put them in the various journals. So that's just all about the purchase. Okay, now we're going to be looking at a transaction on the purchase journal that we had. So the purchase journal, the first transaction, I'm just going to take an example. So it was on the 6th of March. So it was on the 6th of March, purchase of goods. Okay, so purchase of goods. We have already do the step 1 as the other one, calculation of the VAT. So that's the step 1, the calculation of VAT. The first thing that we're going to do is put the gross amount. Put the gross amount. And what was the gross amount that was given? The gross amount that was given in the question was 5,600,000. So it was 5,600,000. So we're having 5,600,000. The next one was VAT. But here it was a little bit different because the VAT here was already given like an amount. They was already given an amount which was 312,000. So the value was given as 212,000. So this is it, 312,000. So we're going to put a line here. I'm going to try to record down the net payable. The net payable, which was the sum between the two. The net payable is the sum between the two. That is 5,912,000. Okay, franc CFA, please. We're putting a franc CFA. Franc CFA. Okay, step 2. Let's move down to step 2. The step 2 here is manual entry. Manual entry. So the manual entry, what is happening? They say purchase of goods 5,600,000. VAT on purchase on credit from the supplier charge. So we bought goods from supplier charge. So what is actually happened was debit, because we debit everything that enters the company. I will credit everything that goes out of the company. So that's the general law. So what's entering here? Since we are purchasing goods, so it's good that is entering. Account 601 is a good that is entering. Now to the credit of, I've told you guys this plate is to debit. And I put it here, it means that it is debited. Now to the credit of, what was happening actually was the sales of goods. So because there was sales of goods now, so don't forget that there was VAT. So we are going to put the account number for VAT down here, 44516. It was the first VAT on purchase, so it's 4451. Now to the credit of what was going out now, since we're buying goods, so it was cash, because they say the payment was made by cash by bank. So we're paying now by bank, so 521. So it's cash they leaving the company, that's why we're crediting it, and it's goods that's entering the company, that's why we're debiting it. Now in the step 3, Let's now move to step 3. The step 3 now is talking about analysis. Which the analysis now I've show you guys how to analyze the other one. Now to analyze this other one, what was actually happening? The first thing was there was first of all goods. We bought goods with VAT already there. Yeah, we're going to debit the goods actually that we bought, but now we're giving it to a that we're buying goods now. Means that we're buying on credit. So we're going to credit bill our supplier and not the payment. Get it? Because first of all bought on credit before now making a payment to them. Like you going to take goods from somebody, first of all sell it before paying his money. So that action of you telling of you taking the this thing is going to debit you're going to debit the purchase of goods with the VAT, and now credit the supplier. Your supplier, which supplier was it? You need to identify the supplier. The account 4014 it was a supplier 4014. Now after you have gone and taken the goods, now you have sold it now the goods. Now you need to go and make the payment back to your supplier. So while making the payment to your supplier, what was going out? It was their money that is going out. So we're going to first of all debit the supplier and then credit your money that is going out of the company. That means 5212. This is a method of which we analyze. You need to now put it back here. The first thing I've written, the first thing I do just recopy this first information as the first thing 601, and the down is 4451 to the credit of 521. Now now in this part now, you just put your flash down here, you put your flash up here to show that there was actually a supplier that was credited, and there was also a supplier here that was credited, that was debited. That was debited. So this is how they analyze the data. This is showing that that's how they analyze data. Now after it, don't forget to place them in various journal. Here we're going to put here purchase journal, because here the see that there is no cash here. Here there is no account 5, and where there is no account 5 means that is a purchase journal. Where you're just seeing account 5, please, it just means that it's a cash journal that is going that way, because all payments of the company is made in the cash journal. So we're going to put 2 circles to show how it's going to enter the account. So here we'll just recopy the information. So 4014 and 521. Now here we're going to put in the journal 601 and 4451 and also 4041. So this is going to enter. So this was just an example to show you guys how it's going to be recorded. So this is it. The other ones people can take charge of doing it. I will just show you the final answer of everything, so that some people now want to screenshot will also have the possibility of screenshotting them. So these are them. Okay, so thank you guys. So let's get back to our recording. Let's get back to our this thing, filling up the purchase journal, the sales journal, or the rest of the journals. Now the general journal now is taking care of the expenses. All the things that you saw as water bill, electricity bill, that's for the sale, that's for the general journal. So all those extraordinary activities and expenses, that's why we're not going to analyze them. Everything that is not having VAT, we're not analyzing them. That's the thing. Okay, thank you guys.
Okay, so now we are done with recording all the paper, recording all the sales of goods and the purchase of goods on the paper. That means all the manual entry and the analysis and everything. So it's actually the thing that is going to permit us, in order for us to like easily record it in the purchase journals, in the sales journal, and in the cash journal also on the paper. Okay, so now we come back to process. We are going to come on manual entry. Let's come on manual entry. Okay, now we are going to look at the questions. What the question tells us: they say the company is into buying and selling, carry out the following transactions during the month of January. Please, there's always a little thing about the date I wanted to specify. Yeah, so some students always have complication about the date, because if it's a your date here, if it's a year, your period is wrong, it means that maybe the examiner, while trying to mark your paper, is not going to be able to allocate where you actually put the period. That means where you actually record the transactions. You get it? Like now, like that, we recorded the balance sheet at the month of April. So this is when I open the month of April, we're going to be able to get to the balance sheet. But if in case we're opening the month of April, that means manual entry, we're putting the period here on March. Maybe let's say March. I'll open it. We'll see that the balance sheet is empty. So it also depends on the period and when it's well stated in the question. But here there was a confusion, because here it was not stated in the question. We could just say that the financial statement at the beginning of the period of the company, which we could be. and there was a light confusion about the date on this question, but I'm not sure in the exams it's going to be the same way, because here they say the company is the buying and selling and did carry out the following transaction during the month of January 2019. They say the transactions are carried out in the month of January, but here they're showing me that here was the 2nd of January, but the next one is on the 10th of March. Okay, so there's a light maybe typing error or a confusion about the recording part. So we will just assume that all these transactions were carried out in the month of March, because majority of them to look about the thing. Majority of the transactions were carried out in the month of March. I say yeah, all of them is three everywhere. So it should be a mistake with the first transaction. You're supposed to put it on the month of March. So if there was on the month of March, it means that also the balance sheet was supposed to be at the beginning of the period. That means at the beginning of the month of March. And then, but we don't record it in the month of April since it was specify any date for it. So we're going to come back to the manual entry. Now we're going to read on the code. The code for purchase was PUR. So that's right. Yeah, right. So PUR. As easy as it is. I was going to choose here the period of March. I was going to choose here period of March. Please choose the period that is given in the question. When the transactions occur. When did the purchase occur? Was in the month of March that all the purchases and sales occur. So here we're looking at the purchase journal. So it occurs in the month of March. We're going to choose March as specified. So we're going to take, please be very attentive, be very careful about this period. So you can make a mistake here and put in the month of January, and when the examiner is trying to mark your paper, it's going to open by the month of March thinking you recorded it, and if they have not recorded it, it's just going to assume that you have not done anything. So just be very attentive here. So the purchase journal, we're going to open on the purchase journal. So here is the purchase journal. Here the first thing is a date. When did the first transaction occur in the purchase journal? So the first date in the purchase journal was the 6th of March. Purchase of goods, VAT distinct, supplier charge, but the payment was made on the 22nd. Please. So here was the 6th. We are going to put here 06. We are going to put here 6 or just 6. It's going to be okay. We'll just put here 6 and we'll press on the tab key. The voucher will just keep it. Just keep all the 2 vouchers. And here the general account. Here, please, I wanted to emphasize here. Here in the purchase journal, we are only recording the general account. That means the account for the purchase of goods. I will put the amount, the gross amount that was stated in the question. The remaining ones are going to be calculated automatically. That means the VAT. That's why we're already inputting the VAT plus their values. That's what's actually nice about this software, is the fact that it's easy to be used. So we have put all the informations correctly. So here now the VAT is going to be calculated. VAT of purchase is going to be calculated automatically, and now the amount will be the total amount. That means the net payable will also be calculated automatically. The only thing you have to input here on the purchase journal and the sales journal, it is just the gross amount. That means the gross amount for the purchase of goods or for the sales of goods. So now let's look at the general amount. The general amount. So I'm just going to put here 601. Since it's purchase journal, we're going to record here only purchase transactions. Only purchase transactions. And as we saw in the paper here, they put a column, we put a circle on the purchase of goods and put a C on the sales of goods. So that's why I'm going to follow on where there is a purchase of goods. That means there was 601 to be recorded, 4451 and 4013 for the supplier. So here we're going to just put 601. We're going to put here, just come and click here once, click once, purchase of goods. Now when you put on the purchase of goods, his purchase of goods here, because we're actually receiving goods. And when we're receiving goods, we're debiting it. And when goods are going out, we're going to credit them. So here, since we're receiving goods, we're going to debit it. So let's go and look at the amount that we need to debit. The amount here is 5,600,000. So this is what I'm actually going to record. That's all. 5,600,000. We'll debit here 5,600,000. And then we'll press on the enter key, just going to record it 5,600,000. The next thing, we're just going to put the account number as stated in the question and stated in our recording. The next account I was supposed to put, it was VAT 4451. That means the first VAT, because the first VAT was it 4451. You're going to put here what 4451 purchase, VAT on purchase. Have you seen the amount was calculated automatically? I did not press anything. It was calculated automatically, and it is right because according to our recording, that was actually the VAT that was supposed to be there. We'll just change the VAT name. That's all. I will just press the enter key. It's just going to record it. I think it's giving some amount. Don't see the other magic thing is going to happen. Just press on the tab key That you come here, you just record the next one. That was according to our question where we put on the circle, we circle the purchase journal. It was 4013. No, first of all put the general account, because the general account is it since the supplier. So first of all they put the general account, that means it was 401. I put it 401. After now the SP account, now which supplier was it? You identify the supplier he was supposed to be. So okay, supplier Charles, he was a third supplier, not the sorry, it was a mistake. He was a third supplier. He was a third supplier in the company, because we were having two suppliers. So he was a fourth supplier in the company. Supplier. Okay, so we're going to get back to the question. Now it's supplier Charles. We're just going to put the Charles. Yeah, we're going to just put the press on the listing. Item. This amount appeared there ever since automatically. That the sum of the two. It just appeared there automatically without me doing anything. So I'm going to press the enter key. It's going to record him directly. Okay, so the next one now it is the next purchase that we did. The next purchase was on the 16th, I think so. The next purchase was on the 16th, so we're just going to come up with the general amount. All the purchases that was supposed to be recorded, so we're just going to be done. See, the purchase journal always needs to also be balanced as well as the sales journal. So the purchase journal is well balanced, so it means that we're actually done with it. We can close it easily. Now we're going to move to the sales journal and do the very procedure, the same procedure. We'll just change the name. What was the name again? CAL. That's all. No stress. The period is correct because it's also matched also. You just press on the enter key and it's just going to open sales journal. This I make a mistake here in the last video. I put here the sales of goods, so I'm just gonna correct it at the level of the journal codes. Let me just gonna correct the name. It was a light mistake, sorry. I'll just come and correct it. Sales journal. Okay, now it is correct. As I'm correcting it, just correcting directly. That's nice about the system. Okay, now on the sales journal, they're just looking at people of recording that we did. The first sales journal was carried on the 3rd of March now. So we're just going to take a year now. Here we're just going to record only the sales of goods, and the sales of goods account 701. That's the only thing that we're going to be recording with the amount, because the other ones are going to be calculated automatically like for the purchase journal. So we're going to take the first one, only the gross amount that we have. 701. Yeah, sales of goods. Sales of goods. And this thing, when you press on the tab key, yeah, see, just see, when I press on the tab key, it directs me automatically where I need to put the amount. I'm the one choosing whether I need to put it on the debit side or on the credit side. What comes to the level of the purchase on the sales journal, it directing you exactly where you need to put the amount, where you need to put the gross amount. Like, yeah, since here normally it is sales of goods, so it's supposed to be credited, but normally it was supposed to all come here before I press again the tab key twice before you reach here. But it's directing my tab key directly where I need to put the amount. As I'm tapping it, it's going to put it directly here when you're going to input the amount. I'm going to see maybe in the next one. Okay, so now the amount here was supposed to be 2,050,000. So that was the amount that we were having as a general amount. So we're going to finish it. Press the enter key. 2 million. Here is. Oh, there was a mistake. It was 2,050,000. I put 500,000. Okay, and 50,000. Okay, so the next thing that we need to record now, it is, we don't change anything here, please. Don't change anything here. Don't even touch the date and everything. So now we have to record a new one, a new transaction. Now here we're going to put what was on the thing that will circle on the level of circling the sales journal. After the 411, we're going to record now. After the 701, we're going to record now the 4431. That was a VAT for it. And the VAT, is it correct? Yes, it's correct because it's matching with the VAT that might be on my question paper that I actually solved. That means 312,625, 312,625. So press the enter key. It's going to directly record here and balance up. Don't even change the date, just allow it, the voucher, you allow it. You come here now. What was the last one? After that is the step. You first of all record sales. After recording sales, you record VAT. After VAT now you record now the customer or the supplier. Okay, so that is process. So now here was a customer, it was customer 4113. Let's just go and confirm. Oh, they say voila. Because I put 4113 is wrong here because I'm asking for the general account. The general account for the customer was 411. So I'm just going to press on the tab key. Now here I'm going to change it now. Here I can change it to 3. To 3. Here is supplier Soho. Let's just go and look whether the first transaction was actually supplier Soho. Okay, yeah, it's customer. It is supplier. Sorry, I'm very, very sorry. It was customer Soho. So the customer Soho has appeared automatically. Customer Soho, just press on the customer Soho. It's going to put the amount automatically. The total amount is it corresponding to what are having on the paper. If the amount doesn't correspond what they have on the paper, it means that there's something wrong somewhere. Yeah, either the paper is wrong or maybe the amount in the system is wrong. So it should be one of the two. So when they say coincidence, it's really hard to find where the problem is because this one calculates it automatically. So to get to the source of the problem is really, really a problem. It's really, really a problem. So I'm going to put the enter key is going to balance up with the other sales transactions. So the one was on the 3rd, we're going to look at the other sales transaction that occur on the 8th. So that's how we're going to do for all the remaining ones. So the transaction that occur on the 8th, that was on the 8th. I just need So here we're done with the sales journal. It's in the full amount. Everything is balanced. Here is balanced and here is also is balanced. So we're actually done with the sales journal. So we're just going to close it and move to the next journal. So the next journal that was there was cash. So we just remove it. What's cash starting with CAS? So that's it. Very, very easy. The cash journal. I'm going to open the cash journal. So now in the cash journal, we're going to record that second circle that we did in the recording part, the manual recording. So we're just going to record that second circle as appearing. So the first thing that we're going to do, we're just recording by the customer and the amount. You are going to see now the use of the 520. That means the reconciling account. It means that it's going to appear automatically with the amount. It means that it's going to balance itself automatically. You just put the amount here in the cash journal. Just put the amount of the customer. It means that you just put the account of the customer and you record the amount. So let's just start from the beginning or from the purchase to the last one. So the first one was sales of goods. So let's look now on the cash journal. What was appearing on the 3rd? I'm going to record the general account. I'm going to put the customer distance. So it was 411. It was 411. So now here we're going to record it as it was 411. So here we're going to record it as 4113. So 4113 was for customer 4113. Here we're going to record customer 413. I press on the tab key. When you press on the tab key, come and choose customer Soho. You choose him and it's just going directly on the credit side alone. You're not the one making it, it's going alone there. The only thing they are going to record here in the cash journal, we're recording by the net payable and not the gross amount. Please take one note of that. Here we're recording by the net payable of each thing. Is that from the 3rd to the last one, we're going to record by the net payables. The net payable for this one was 2,362,625. So that was the net payable. So as we're going to press the enter key, just see what is going to happen. As we're pressing the enter key, that's the 520. What I call the reconciling account. It means that it's there to place off automatically and it's going to record it. It means that you're going to balance up the accounts of both the sales transactions and the purchase transactions automatically. I'm not the one that did anything there. You just enter the amount and it's going to put the debit or the credit balance there. But before that, I forgot to tell you, we forgot to record one transaction. That was a transaction on the 11th. Yeah, on the 11th, that was sales of goods by NFC Bank. Check 1,800,000 to customer Philip. We forgot to record customer Philip and we forgot to record also his sales. So the first thing, if there in case it happens to you in the hall that you forgot it before time, You come now here, you come back here to your structure. Please be observing what they proceed you. You come back here to your structure, you come to SP chart because he's not even inside the list of the customer. Yeah, because okay, he's even there, he's already there, customer Philip, but we do not record his transaction that occur in a sales journal. So in case it happens to you in the hall or maybe in the office or anywhere you are, you come back here to process, you come on manual entry, you open back this SAL, that means the sales, this thing, you open back the sales and try to cross check whether he was recorded. Yeah, there is no account 4115, that means customer Philip is not there. So forgot to actually record customer Philip himself. So since he was on the 11th, so we're going to record here on the 11th. Yeah, we're going to record here on the 11th. You come here, you record 701 001. That was sales of goods. You come here, record sales of goods was 1,800,000. 1,800,000. So that's the distance that's appear. It's just recording it automatically like that. Now you record now since he was not having any VAT. That's why we just want to take note of it of seeing whether he was there or not, because he was not having any VAT. So it was just a normal transaction without any VAT stipulated on it. So now we're coming here now on the customer. Since he was customer Philip, so we're selling to him was customer Philip. We're going to put 411. First of all, his general account. Then here behind, we're going to put 4115. I'm going to put the customer Philip. We're going to select him. And you see here, just put the debit balance. So you're just going to put it. Is it going to be balanced 92,700 and this thing, and here is the same amount. So in case it happens to you in the hall, that's the way you need to solve it as easy as it is. When you are done, you just close the account. So now let's continue with the cash. This in the cash journal, there's a little bit of complication in this paper, because the day that they made the transaction, the day that they made the transaction is not actually the very day that they made the payment. So when recording, you should be very attentive at the question on when they make the transaction, because the transaction was, maybe they can make a transaction on the 3rd, that's when the sales of goods will appear on the 3rd, but in the cash journal it can appear on the 13th, that's when they make the payment. So it's according to the payment they are following for the cash journal. So now here we're going to get to the this thing. So I've already recorded the first one. So the second one now here, like for example this one, they say purchase good 5,600,000 VAT on purchase, this thing and everything on from supplier charge, that we promise to pay this money on the 22nd of March. It means I will actually pay this money on the 22nd and not on the 6th. So we're first of all going to skip it because it's right on the 22nd that will make the payment, because cash journal is following by the day of payment. So we're going to skip it. First of all, going on the 22, you're going to show it. This is when he paid. UBA bank check 5,600,000 was issued to the supplier charge. That's when we actually made the payment of it. So we cannot just record it at once. So yeah, the next one was sales of good on credit, VAT on sales to customer Java. Okay, a wholesaler of transaction. Okay, he promised to send the money on the 24th. Him was on the 24th. This is where he make his payment. So we're not first of all going to record it. A check of UBI received from this thing. So we're first going to wait. Now the other one, yeah, sales of goods by an NFC bank check. Okay, customer him, he already made the payment on the very day by NFC bank check. So the very day that he bought him, he made the payment. So yeah, we're just going to record him. Here was on the 11th, so we're going to put the 11, and here we're going to come here and put the customer. It was customer Philip. So we're going to come behind here and we're going to remove this one and put 5 and put the customer Philip. Then put his amount was supposed to be paid. This is customer 1,800,000. This okay, 1,800,000. So that's it. I just put the corresponding this thing reconciling account for the store. Okay, let's go now to the question again. Please let's just be very, very attentive at the question. Okay, so the next one was purchase of good by cash. When I say by cash, it means that the payment was made on that very day. So it was paid by cash. So this thing from supplier Desmond. So it was paid by supplier Desmond on the 16th. We're going to record it because he already made his payment. So on the 16th, we purchase goods from supplier Desmond. So here the general account will be 401 to supplier Philip, or supplier Desmond was 5. 4015 was supplier Desmond. When you just press on the tab key once, first of all, it goes on the maturity. Press the other one, it's going to show you where to record the amount. Don't forget the net payable that we're recording: 6,716,500 francs. That's it. Voila. So that's how we're going to do for the next ones now. Let's just be very, very attentive for this level. Now the next one, okay, UBA bank check 5,600,000 were issued to supplier Charles. So finally paid supplier Charles on the 22nd. That's when we're actually going to record it, because before that there was on the 18th sales of goods by cash. This man made his payment. Sales of goods by cash. Customer Paul who made the payment of customer Paul before supplier Charles. Means that actually customer Paul pay us before this thing supplier Charles. So we're going to record him first on the 18th. So we're going to take it on the 18th. Customer Paul. So it's customer Paul that paid 411. The general account 411. And where was customer Paul? It was on the 18th. That means it was 4116. Customer Paul. They're going to show us where to record it on the credit side. I'm putting my net payable. Put my net payable as 165,600. I see. Press the enter key. It's going to put itself automatically. So let's go and look now on the next one. The next one was now the payment of the UBA check by supplier Charles. So it was on the 22nd that we made the payment. So now we'll go back on the 22nd now and make the payment of that guy, of the supplier Charles. So 401 of supplier Charles. Which your account number? Supplier Charles. One of supplier Charles. Miss record supplier Charles. So it was 4014, I think. Supplier Charles. Okay, supplier Charles, that's it. It's a debit amount, so all suppliers is debited. So what amount was supplier Charles? Under the thing, what amount was supplier Charles? It was 5,912,000. 5,912,000. So that's the amount that's be recorded. The net payable, please, is the net payable I'm putting now. All about the cash journal that we are supposed to record. So the cash journal doesn't need to balance as the other ones. Cash doesn't need to falsely balance, as you are seeing here, because the movement of cash now, cash is entering, cash is leaving. So can also the customer pay the same amount as the suppliers. So yeah, that's why here you're seeing that there is still a new balance of 80 million or something. So because when we close here, is able to close, it's not going to stay. Customer is not by force that you need to balance. Okay, I'm going to move to the last journal that I needed to do today. That was the general journal, GEN. Okay, that's this opening. Okay, so we'll talk about the general journal record, the extraordinary activities like expenses and all the stuff that we'll spend actually. Extraordinary activities, expenses also. So the first one that we're going to look at, it is here. It is going to be the settlement of water bill. The settlement of water bill that was on the foot of this thing. The settlement of water bill was the foot of this thing. So we're going to put here the foot. I'm going to come and try to put here the settlement of water bill. Since it was water bill, so water bill is entering and cash is leaving. We're recording the movement of cash. Everything that is credited is cash, and everything that is debited is expenses. So here now the general account for water bill is 6051. Here we're going to see water bill. There you come. We're going to come here. Since the expenses are debited, how much was for the water bill? Water bill was 32,000. So we're going to record here 32,000. 32,000 the debit side. Then after it, we're going to record now on the very day. We're going to record now the cash that went out, 571. That means cash. Yeah, they say that the general journal is the only journal that follows even the accounting principle of recording, because you record the transaction and directly the movement of the cash at the same time. But the other one, we're seeing that you're separating the movement of cash from the transaction, but here we're recording at the same time. That's why you're seeing cash here. Every debit something, you need to be a credit balance for it. So here we're going to just put on a credit for the cash because it's leaving the company 32,000. So it always needs to be balanced this way. Every transaction needs to be balanced. Every transaction needs to be balanced. So now we're going to move to the next transaction. I've come to the end of recording the journal, the general journal. So these are all the transactions that were supposed to be recorded. So I've said that to every expense there should be a corresponding cash movement. So that was cash or bank. Sometimes there are bank payments, so it depends. So that's the thing. You always need the debit side and the credit side need to always be balanced because everything here needs to appear here. It's in 8 millions, appear in 25 million. Everything is just balanced up. Okay, so we're done with the general journal or the journals. And please, I forgot again something. One account to be recorded. So in case it happens to you too in the war, there was account number here. The first on the 2nd of March. That means purchase of good by cash worth 1,450,000 by supplier Econo. So we do not record it on the purchase. So we need to record in the purchase journal as well as the cash journal. So let's just go and do it as quick as possible. Let's just go to the purchase journal. I'm going to record in as a simple account. Simple account. We're going to record which date was it on the 22nd. Second 061601 purchase of goods. What amount was it? 1,450,000. Voilà. So we're going to record directly the other one. That was the supplier 401. The supplier 03. Voilà. And that's all. So we're done with the purchase journal. Recording him is still balanced. Then we'll go as fast as possible to the general journal. Going as fast as possible to the general journal. I'm going to the cash journal. I'm going to go record in the cash journal. Here will be was on the 2nd. So I'm going to just be there on the 2nd. I'm going to try to record him as fast as possible. So it was 401 since it was buying. Supplier. This is Econo. I'm going to write this amount. Here was 1 million how many thousand was 1,250,000. So this is it. So now the thing has balanced. So the corresponding stuff needs to always be there. So
thank you guys for watching my video and hope you gain a knowledge. So in case of any worry, problem or difficulty about this part 3, you put in the comments or I'll put my contact, you get to me personally. So while waiting for the part 4, see you guys.